Hello, this is Mi-Jun Woo from the University of United States Stock Theory. Let's begin today's United States stock news for June 12th. Welcome once again to Mi-Jun Woo, where we continue to uphold the fundamentals of United States stock investing. Today, I have some good news to share first with those who invest in United States stocks. I mentioned this in advance starting last week. For the first time in a long while, Seeking Alpha is running a special discount promotion. It started yesterday, June 11th, and will end on July 4th. This promotion is quite significant. First of all, since Seeking Alpha has been doing so well recently, the discounts have been very small. So even if you received the special Mi-Jun discount, you could only get about 10% off, which is around a $30 discount. But this time, they're offering a relatively large 20% discount. You can sign up using the limited time promotion link provided here. Especially this time, I personally feel motivated to promote it more actively. Because it was since last week. Now there's a feature that lets you check all the news articles from Seeking Alpha directly in Korean. So, from the perspective of Korean investors, I personally think that the value of using the Seeking Alpha Premium membership has been upgraded compared to before. And for your information, the news articles provided by Seeking Alpha gather all the articles from major United States stock-related media like Consumer News and business channel Bloomberg, Reuters, and Barron's, and deliver the key points in a summarized form. That's why these articles are a bit shorter compared to others. They're brief and summarized. And another thing, you have the advantage of being able to check most articles about the United States stock market and individual stocks all on a single platform. Because some articles are taken from Consumer News and Business Channel, others from Bloomberg, Reuters, and so on, it has the huge advantage of collecting and delivering articles from various media outlets all in one place. That's how you should see it. Of course, because of that feature, the publication time of the articles tends to be about 1 or 2 hours later than the original articles. So, as you can see here, I have memberships for Consumer News and Business Channel Bloomberg, Barron's, Reuters, and Investing, all of them. Well, you guys don't need to do that. You can just think of it as seeing the news about an hour later and read the Korean articles on Seeking Alpha. And this promotion has a very special meaning in terms of timing, because every year there's an event that Seeking Alpha Premium members eagerly look forward to. It's the promising stocks for the first half of the year and the promising stocks for the second half about twice a year. Stephen Kress, the vice president of Seeking Alpha, personally recommends which stocks to invest in. But this time, the day they announce the promising stocks for the second half of the year is June 18th. So, if you sign up before June 17th through this event, you'll be able to directly receive the article published on June 18th. Now, to briefly explain the price, a 20% discount is offered on all products. In my opinion, products like Alpha Fix or Seeking Alpha Pro membership are not very cost effective. So instead of these memberships, if you sign up for the premium membership, the original fee is $299, but with a $60 discount this time, you can get a 1-year membership for $239. I'll wrap it up with that. For those of you who enjoy stock analysis, want to receive various articles from Wall Street in real time, and now can even read them in Korean, I hope you take advantage of this opportunity. Let's begin with the major stock news for June 12th. Today is Thursday. After today's Mi-Jun broadcast, I'll record United States Stock Elementary School with Chief Executive Officer Kim In-jung. So I'm feeling a bit rushed. I think I need to move things along quickly. I should finish yesterday's Hope of United States Stocks segment. First, if you look at the S&P 500 map, it was mixed yesterday. About half of it is red and about half is green. Overall, it looks like there were a few more stocks that declined. In addition, since many of the megatech companies, especially in the tech sector, saw their stocks fall, we can say that the market ended on a downward trend. In fact, the Dow Jones was down 0.02%, the S&P 500 was down 0.27%, and the Nasdaq dropped 0.5%. Yesterday, one noteworthy aspect was that the S&P 500 started off with a really positive sentiment. It was up 0.33%, and even at this point, which is 1:30, it was recording a 0.2% gain, but later it kept dropping and eventually turned negative. The Nasdaq was even more volatile, especially in the beginning. In the case of the Nasdaq, it went up as much as 0.41%, but overall, the downward trend continued, and after 1:30, it shifted to a sharp decline. So, let me start by explaining why the mood was good in the morning, but turned negative in the afternoon. First, in the morning, a very positive piece of news was announced, and it was about the price index that we are concerned about. The United States Consumer Price Index for May was announced, and it only rose by 0.1%, so it was lower than the market's expectations. The market was expecting it to rise by about 0.3%. The Core Consumer Price Index, which excludes food and energy, is even more crucial. This rose by 0.1% and 2.8% respectively, while the expected figures were 0.3% and 2.9%. So, what that means is the Core Consumer Price Index, which the Federal Reserve prefers, was actually better than the headline Consumer Price Index. So as concerns about inflation eased, the United States stock market started to rally in the early session. That's how you can see it. However, this atmosphere didn't last long. Because in the afternoon, two pieces of bad news overlapped. The first one was bad news disguised as good news. Because President Trump said that a trade deal had been reached with China. But if you read the details, it's a bit strange. President Trump said on Wednesday in London this week that, according to the agreement between the two countries, the United States and China would maintain the current low level of tariffs. This low level of tariffs is a very important phrase. Here's what he said. He posted on his own social media that the deal with China is almost finished, with only final approval from President Xi Jinping and himself remaining. He left a message saying, "We will impose a total of 55% tariffs and China will impose 10%. The relationship between the two countries is excellent." Something seems odd. China was hit with a 55% tariff. But he commented that it was a really good negotiation. If we look further down and examine it in more detail, in the tariff figures announced by President Trump, there is a basic tariff of 10% and additional 20% charge related to fentanyl trafficking and about 25% from existing tariffs and the most favored nation rate that have been in place since his first term. This is what a White House official said. But it's still a bit unclear. And one more thing, they were asked in an interview with Consumer News and Business Channel whether the tariff levels would remain unchanged after that. Secretary Rutnick said he could say that for sure, so he commented that 55% is final. So you can see that the results turned out a bit differently from what the market was expecting. In my view, despite President Trump's announcement of a deal and his very positive spin on it, the United States stock market couldn't help but stop its upward trend and turn downward. The reason is the uncertainty, which is what we dislike the most. As I emphasized before, what the stock market hates the most is uncertainty. Whether the news is definitely good or bad, as long as it's clear, the United States stock market actually tends to show a positive trend. That's how you should see it. Now, crucially, the substance of the agreement was very ambiguous. There was no official agreement document signed by the leaders of the two countries. Xi Jinping and I both had to agree. That's what was said. And furthermore, since there were hardly any details made public, investors lacked a reliable basis for trust. Therefore, the declaration of a completed agreement can be seen as more of political rhetoric than actual progress. In reality, it gave the impression that a proper agreement wasn't really reached, making the announcement seem very ambiguous. Additionally, there was more bad news simultaneously. There was a report that the United States is preparing to withdraw some staff from its embassy in Iraq. As a result, oil prices suddenly surged by more than 4%, and concerns about inflation spread once again. So in conclusion, the positive consumer price index news that was announced this morning or yesterday morning was overshadowed. Because the positive consumer price index news yesterday morning eased concerns about inflation, the stock market was going up. But now, that good news about inflation has disappeared. Therefore, President Trump's announcement also increased uncertainty. And on top of that, the positive news about inflation was overshadowed. So, it seems we can summarize that the United States stock market showed a downward trend yesterday. Next, I will summarize the market sentiment using various indicators. Yesterday, the downward trend didn't really accelerate, and most of the stocks only declined slightly. Therefore, the market breadth remained unchanged. Yesterday, 77% of stocks showed a good short-term trend, but that slightly decreased to 76%. The number of stocks with a good long-term trend also dropped a little, from 51% to 50.39%. So far, the atmosphere is still similar. You can see it that way. And the market sphere index has also gone up a little bit. It's at 18 and 24, but it's still quite a bit below the 200-day moving average. So you can see that the unique atmosphere of the market is still being maintained. It's the same with the fear and greed index. It's staying at 62, which is about the same level as yesterday. So the market atmosphere isn't getting too hot or too cold, and this very desirable situation is continuing. Next is the market score provided by ChoiceDAC. The market score has gone up quite a bit. Now, even in the greed phase, it's reached close to the middle. It's showing 86. Based on the market score, it may be necessary to slightly increase the cash ratio moving forward. That's what we can infer. Yesterday, the American Association of Individual Investors survey results were also released, and they've become a bit more positive. Compared to last week, the proportion of investors who expect stock prices to rise over the next 6 months has increased a bit. It's 36.7%, and still 33.6% are expressing negative opinions. Now, if you look here, there's the historical average. We're now getting very close to the historical average. If sentiment rises just a bit more, it'll be at the average level. That's how you can see it. Next is the performance of Mijun and Top Pick. Fortunately, although the market index fell yesterday, there were more stocks in Mijun and Top Pick that went up. Talen Energy was the top performer, surging 7.73% yesterday due to an unexpected positive factor. Celestica gained 5.09%, followed by Credo at 4.54% and Broadcom at 3.38%. Palantir rose 2.70%, Nextracker 1.98%, Vistra 1.30%, Taiwan Semiconductor Manufacturing Company 0.77%, Uber 0.2%, and Tesla 0.10%. Trade Desk ended the session moving sideways. The rest of the stocks fell slightly. Alphabet dropped just a little by 0.7%. Nvidia was down 0.78%. Strategy was down 1.04%. And Bitcoin fell 1.13% now at 107,420. In addition, Meta dropped 1.18%, Bit was down 1.42%, Advanced Micro Devices fell 1.70%, and Amazon had the worst performance, dropping 2.03%. On yesterday's broadcast, I explained in detail why the stock Nvidia often appears on the United States market broadcast. Coincidentally, it seems like we have to start with Nvidia again today, because yesterday there was a flood of articles about Nvidia throughout the day. When I counted, there were more than 10 hot news stories related to Nvidia reported. Yesterday, an event called GTC Paris was held in Europe, so a lot of partnerships were announced all at once. Let me briefly read you just the titles, using a Korean translation. It says that Nvidia is Jensen Huang discussed artificial intelligence factories and agent-type artificial intelligence at the Paris event. Let's take a quick look. Jensen Huang referred to the fourth industrial revolution as the artificial intelligence era. He announced that Nvidia plans to build the world's first industrial artificial intelligence cloud in Europe. I'll explain this in more detail through another article. And this cloud will also be used for designing and simulating real-world environments. They have introduced a new Halo system for autonomous vehicles. Jensen Huang said that Europe has now awakened to artificial intelligence, meaning that many European companies will buy artificial intelligence GPUs, and he boasted about it. He announced that an additional 20 artificial intelligence factories are planned in this region, and that a huge number of GPUs will be exported to Europe. This time, a very famous company appears, Novo Nordisk. They are working to accelerate new drug development through artificial intelligence with Nvidia, so they plan to use Nvidia's GPUs to develop new drugs. This hot news was reported. Next, Perplexity comes up. Nvidia and Perplexity are joining hands to introduce a sovereign artificial intelligence model in Europe. A sovereign artificial intelligence model means that artificial intelligence is implemented in different forms for each country. Because the languages are different, and there are many complex and diverse reasons such as culture and other factors. Therefore, the need to develop new artificial intelligence models for each country is emerging. That's why, in Europe, Perplexity and Nvidia will work together to develop sovereign artificial intelligence for each country. This is how you can understand the article. Next, Supermicro appears. There is amazing news that Nvidia is expanding into the European market with more than 30 artificial intelligence solutions based on Blackwell. Supermicro is a company that makes servers. So the newly released Blackwell is an architecture, right? So instead of Hopper, they are developing more than 30 servers using the new Blackwell. They will now be selling them enthusiastically in Europe. That's how we can interpret it. Next, Mistral appears. Mistral and Nvidia are collaborating to provide artificial intelligence infrastructure that will replace major cloud companies. What is artificial intelligence infrastructure? It's the cloud, what we usually call hyperscalers. Globally, the top 3 companies providing cloud services are Amazon Web Services, ranked first, Microsoft's Azure, second, and Google Cloud, third. Now, in Europe, even small companies like Mistral provide cloud infrastructure. Behind it all are Nvidia's GPUs. That's how you can understand it. Now, if you look at the title of this article, it says that Nvidia is building Europe's first industrial artificial intelligence cloud equipped with 10,000 GPUs. This news has been reported, and since this article is very important, I'll read some of the details for you. Just before this, we looked at a number of positive factors related to Nvidia one by one. I believe this news is also very significant. Nvidia is reportedly building the world's first industrial artificial intelligence cloud for European manufacturers. Up until now, when we talked about artificial intelligence, we've mostly used it in software, but now industrial use is becoming the mainstream. That's how you should see it. Let's take a look at what this means. What about the newly announced artificial intelligence factory based in Germany, the Artificial Intelligence Factory? If you put in 200 of Nvidia's proud DGX B200 systems, this becomes a Blackwell system. That's how you should see it. It will be equipped with about 10,000 GPUs, including Nvidia RTX Pro servers, and it is said that it will run Nvidia's Proud Compute Unified Device Architecture Library, as well as Nvidia RTX and Nvidia Omniverse. Now, it seems that Omniverse will play a very important role here. When you hear Omniverse, there should be a word that comes to mind. That's right, it's the metaverse. So what is Omniverse? Nvidia has newly built the metaverse with Omniverse. I'll explain its role in more detail a little later. And it also supports accelerated workloads with software providers like Siemens, Ansys, Cadence, and Rescale. So what are we trying to achieve with all these different plans? European industrial companies will be able to accelerate all manufacturing applications from design, engineering, and simulation to digital deployment in factories and robotics. So, industrial companies are basically making things, right? That's manufacturing. And there are various stages in manufacturing, but by making all these stages extremely efficient, productivity will be maximized. That's how you can look at it. Even with an explanation, it's still difficult to grasp, so we should examine it more closely. So Nvidia is working with European manufacturers like BMW, Maserati, Benz, and Schaeffler. They announced that by running Nvidia accelerated applications, they are revolutionizing the entire product lifecycle, from simulation-based product design and factory planning to artificial intelligence-based operations and logistics. What this means is, the most important thing here is that it's simulation-based. Simulation is virtual reality, you know. Earlier, I mentioned that I call the metaverse the Omniverse. Inside the Omniverse, they run simulations. What do they do with it? They run simulations when designing products, and even when planning or building a new factory. They create it in advance in the metaverse. In other words, they build it in the Omniverse. And also, when operating or handling logistics, they run simulations as well. They test everything in the Omniverse in advance to see what is the most efficient way, how to maximize productivity, and then they plan the factory, and then they design and make the product. That's how you can understand it. Now Jensen Huang appears, and according to Jensen Huang, by building Europe's first industrial artificial intelligence infrastructure, we are helping the region's leading industrial companies advance simulation-first, artificial intelligence-based manufacturing. In the future, artificial intelligence will play a decisive role in manufacturing as well. And the reason why artificial intelligence can play such a crucial role is because of the Omniverse we've built. Through the Omniverse, we will help them simulate various situations so they can manufacture a variety of products more efficiently and more productively. I believe this is how we can interpret it. Let's take a quick look at NVIDIA's momentum. Out of 26 indicators, 5 are showing sell, 8 are neutral, and 13 are indicating buy. Currently, the relative strength index is 66.99, so it's not in an overbought situation. There's still some room for it to go up a bit more. Now, the stock chart is very important, and right now, the stock chart is at an inflection point. Now, let's hear what this is all about. Nvidia's stock price has reached an important inflection point at the top of a box range that has lasted for about a year. Short-term technical indicators are showing strength, but since it's approaching a strong resistance zone where it has failed several times in the past, all market attention is focused on whether it will break through this time. That's what it says. I've drawn a box here and it's saying that the price is now at the top of this box. And if you look here, it kept falling at similar points, so it's very important this time that it doesn't get blocked here and breaks through. That's how you should see it. Now let's take a look at the positive scenario. The box range currently being tested. Since it's a box range, it's a bit hard to see right now. Let me show you the 5-year chart for a moment. If you look at the 5-year chart, take a look here. You can see that a box has formed here. There's a very strong support line at the bottom and a solid resistance line has been established at the top. So this is the price pattern of Nvidia, forming a box that it hasn't been able to break out of for a year. That's how you can see it. Now, if the price strongly breaks through the upper resistance of this box range, that is, between $143 and $150 accompanied by high trading volume, that's very positive. That's how you should see it. Now, if it can just break through this 143 to 150 range, it can be understood as a very positive signal that ends the long sideways period and starts a new upward trend. On the other hand, if you consider the negative scenario, once again, as in the past, it fails to overcome the resistance and falls. In this case, the stock price returns to the box range and initially undergoes a correction down to the 20-day moving average. The 20-day moving average is shown here in orange, right? You can see that the stock price keeps rising along this orange line. So if it drops here, there's a high possibility that the 20-day moving average will provide support, at least initially. The 20-day moving average is currently at $137. If the price falls below this level, the 60-day moving average, which could drop to $120, may provide support. In my opinion, even if it breaks below the 20-day, I'm optimistic that it will be supported at the 60-day moving average. Although the overall market declined yesterday, there was one stock in our United States top picks that surged sharply. That was Talen Energy. Talen Energy's stock price soared by as much as 7.73%, and now its one-year return has exceeded 138%. Now, let's take a look at what happened to cause Talen Energy's stock price to surge like this and talk a bit about the story behind it. Talen Energy announced that it will expand its nuclear energy partnership with Amazon. Let's take a closer look at the details. According to the new power purchase agreement, Talen Energy will supply electricity to an Amazon Web Services data center located near the Susquehanna power plant. They will supply Amazon with electricity to support the campus's artificial intelligence and other cloud technology operations. They have also gained the ability to supply electricity to other sites within Pennsylvania. That's the key point. I'll explain it again in a little while. Also, Yangsan is the new small modular reactor at Talen Energy's Pennsylvania site. That's what we call a small modular reactor, and we're considering building a small modular reactor. We also plan to pursue ways to increase energy production at existing nuclear power plants through power uprates. That's very positive news. So, according to the expanded power purchase agreement, what about Talen Energy? Talen Energy is expected to supply Amazon with up to 1,920 megawatts of nuclear power by 2042. The agreement also includes an option to further extend the contract period. There was another important announcement as well. Yangsan's existing Susquehanna joint site load contract will be converted to a front-of-the-meter system after the completion of transmission reconfiguration, which is expected in the spring of 2026, coinciding with the refueling outage of the Susquehanna power plant. They delivered this news. What does this mean? This can be interpreted as changing the method of power supply from direct transactions to open market trading. Originally, let me show you a picture here. Here there's a power plant, and this is the Amazon Web Services data center. The plan was to draw electricity directly from here. But the problem is, that plan didn't go through, it wasn't approved. They changed their strategy, that's how we can understand it. I've explained it here. The existing joint location load contract is a method where the Amazon data center is directly connected to the Susquehanna nuclear power plant right next to it and receives power directly from there. Now, what is this new method, the front of the meter, that's mentioned here? Talen's power plant first sends all the electricity it produces to the public power grid, and then Amazon draws only as much electricity as it needs from that public grid. That's how you can think of it. So what does this change mean? From Amazon's perspective, the total amount of electricity they've contracted with Talen, they can flexibly use it for data centers in other regions of Pennsylvania as well. Amazon has multiple data centers and can draw power from various sources, which can be seen as a positive aspect. And from Talen Energy's perspective, if they sell electricity to the public power grid using the front-of-the-meter method, any excess electricity produced beyond the amount contracted with Amazon can be easily sold to other companies as well. You can see this as a win-win strategy for both companies. Now, another thing is that for Talen Energy, this collaboration goes beyond simply selling electricity. It holds great significance because it lays the foundation for future growth businesses. So what does this mean? Amazon is one of the world's top companies, and they've signed this ultra-long-term contract with such a major company that will last until 2042. This means they have secured a huge volume of electricity sales for the next 2 decades. If that happens, it becomes possible to invest in the future. Nuclear power plants require investment over a very long period of time. So in businesses like nuclear power plants that require massive capital, securing such a stable source of revenue is an incredibly huge benefit that can't be exchanged for anything else. That's how you should see it. Now, because they've secured a reliable buyer like Amazon in advance, the construction of new small modular reactors, which require massive investment, or if we just improve the performance of existing power plants, we can easily sell them. Therefore, Talen Energy now has the power to invest with great confidence. I think that's how we can wrap this up. We have to wrap up today's broadcast a bit early. I can't be late for my appointment with Mr. Kim In-jung. The last content prepared for today is the Mi-jun podcast. The Mi-jun podcast is a new type of content that I ambitiously planned using artificial intelligence. I conducted a survey about the Mi-jun podcast, and the results were a bit shocking. I asked whether people preferred the Mi-jun podcast or the usual daily United States stock analysis articles. Basically, if they would rather just receive the articles or if they wanted the podcast. That was the survey I conducted. But if you look at the results, they prefer detailed analysis reports in text format, like the daily United States stock analysis, rather than a new type of podcast. As many as 55% of the Mi-jun members gave this opinion, and about 46% said they liked the Mi-jun podcast. So more than half of the members told me that they prefer detailed analysis articles over podcasts. So from now on, since there are people who like podcasts as well, I will provide a detailed article in Korean, just like before, translated and written below the podcast. So if you prefer articles, you can read it below. But if you don't have time to read such a long article, if you prefer an easy-to-understand podcast, you can just click and listen to the podcast. And I thought about why podcasts aren't that popular. I guess it's because it's hard to feel attached to an artificial intelligence voice. It's true that it's very easy and summarizes only the main points clearly. Honestly, I also feel a bit tired of the constantly repeating artificial intelligence voice. So from now on, for the Mi-jun podcast, I tried making it using my voice and my wife's voice. So the podcast you'll be listening to today still uses artificial intelligence voices, but they're modeled after my voice and my wife's voice. I call my wife Omiju, but that's not her real name. It's actually an abbreviation for today's United States stock news in Korean. So starting today, you can listen to the Mi-jun podcast hosted by Mi-jun and Omiju. So, what's the podcast we have prepared for today? We've put together a podcast about an article related to Tesla's robot taxi. We'll be discussing whether now is the right time to buy Tesla stock because of the robot taxi news, or if it's better to sell on the news even now. Let's take a closer look at this topic. Thanks for watching until the end of today's broadcast. I'll be back tomorrow with a collection of various articles that can help you with your investment activities, bringing you the key points once again. Let's all keep going strong together until the day we can all retire through investing in United States stocks. Have a happy day. Thank you. Hello, Mijuan family. Today I've prepared this with my wife Omiju's artificial intelligence voice.
The artificial intelligence voice might still sound a little awkward. Sometimes it even makes me cringe.
But I've done my best to prepare the content for you, so please give it a listen and let me know what you think in the comments. Today we'll look at this material together. It's a recent analysis article about Tesla. A strong buy recommendation has come out, but as you know, Tesla's stock price hasn't been doing well lately. So today, on our Mijuan membership channel, we'll take a deep dive into how we should interpret this recommendation. To summarize the article, the analyst is mainly citing 3 reasons as the basis for their recommendation. First, the biggest reason seems to be the anticipation for the upcoming unveiling of the robotaxi. Second, there's the slight conflict between Musk and former President Trump, which now seems to be getting resolved. And third, it's about expanding the energy business and strengthening battery production within the United States. Of course, what draws the most attention is the robotaxi.
That's right, the robotaxi, how should I put it? The market's expectations are really high. Even Nvidia's Jensen Huang, the chief executive officer himself, has said that this could become a next-generation multi-trillion-dollar industry, right? Musk also announced it through X on June 22nd. Of course, it's tentative.
It's tentative. Yes, he added that the date could change due to safety concerns.
But you know, Musk's logo and the robotaxi promise, hasn't this been talked about since 2016? It's already been several years.
Right, that's kind of the issue.
This is where it gets interesting. If you look at the actual competitive landscape, Alphabet's Waymo is already offering services in several cities, and they're even charging for it. Yes, that's right. The technology approach is completely different from the start. As you know, Tesla uses a camera-based vision-only system, but Waymo uses LiDAR, radar, and cameras all together.
That's right. There's also a difference in the level of autonomous driving. Tesla is still considered to be at level 2+, which requires driver supervision, while Waymo has achieved level 4, which allows for full autonomous driving under certain conditions. If you look at the business model, Waymo is already running a commercial service with more than 20 paid rides per week. Wow.
It's 250,000 rides.
Yes, and I heard the average fare is about $22. Tesla is just beginning in Austin with around 10 Model Ys, and they're still under human supervision, so there's a significant difference. That's right.
Now that I've heard about Waymo's specific achievements, I'm starting to reconsider the strong buy recommendation for Tesla, especially the difference in their technological approaches. Tesla's camera system might be better in terms of cost, but Waymo's use of LiDAR is said to be more reliable in bad weather or similar conditions. Safety and reliability are the key factors to consider.
Waymo, in a way, is already a strong frontrunner shaping the market, so the key question is how successful Tesla can be as a latecomer entering with a different technological philosophy. And if the initial launch scale or performance falls short of market expectations, there could be significant disappointment. For Tesla, which is recognized as more than just an electric car company, but as an artificial intelligence robotics company, this robotics unveiling will be a truly important test. From a stock price perspective, this is more complex. In fact, Tesla hasn't performed well among the mega-cap stocks this year. It was down 19%. But this analyst says that since he recommended buying in April, the stock price has risen 36%, so he believes there is still room for further growth. Technical indicators, for example, moving averages being in a bullish alignment or the relative strength index indicator surpassing 50 can be seen as positive signals. However, the fact that the price-to-earnings ratio or PE ratio is still high means that growth expectations are already reflected in the stock price. In this situation where expectations and concerns are mixed together, what do you think is the most important point? Lastly, I'd like to ask this question. In the short term, whether the launch of the robotaxi is successful or not is of course important. But what if Tesla is truly recognized in the market not just as an electric vehicle company, but as an artificial intelligence and robotics company? Over the next 5 years, could there be a factor we can't even imagine right now that becomes a real game changer? Maybe this question could be even more important from a long-term investment perspective.